All right. Highlight of the day. We're going to stick to the move and retracement theory. This all happened today, and that's why it's called a highlight. Wrong chart. Helps if you pull up the right chart. This is the S&P E-mini. Now, here's the thing. It's easy to say the market's strong after it goes to there from down here, right? It's even easier to say it's going to be strong when it goes to that circle from this circle. However, there's a couple things that are important when you see a steep rally like this. To say in this area that this is probably the path of least resistance, that the right side's the long side. And I did this in the room, but I'll do it again. Number one, what we know at this point, let's say after a rally, we know number one, that the market was pretty bearish. It wasn't just bearish selling off from there to there, but the market was bearish yesterday for most of the session. All right. If you did a poll, which we do, we had over 50% of people that were bearish, and that should have been the case going in. So when you have a lot of bears, you have a lot of shorts. And what they wait to do is for a rally to sell it, and they put, people get stuck short a lot. Plus the people who are short in a good spot up there or in here, and they had money in it when the market went down to here, they see those profits diminish when you see a steep rally like that, and they diminish fast. So what we know is that it's bearish. It was a gap open lower. All right. So it's pretty bearish. Number one. Number two, they came screaming out of the hole from here pretty quickly, which doesn't give people who are short a lot of time to get out. The less time you give people to get out of a bad position or a losing position or a position that's losing money, the less people got out. So that was a pretty steep rally. All right. At the point of assessing that this could be a retracement and a re-rally continuation, you want to see a shallow retracement. Why? Because the less it comes down in here against this move to there, the less shorts are able to get out that are stuck, right? If it comes all the way down into here, well, then you get a lot of people off the hook, a lot of shorts off the hook. So you want to see and trade a shallow retracement. All right. Also on our puke tool, what highlighted an area inside this square to take a shot and get long was we had some selling, big selling that came in and hit the market inside this circle. And big selling that does not get price to go lower generally is going to get the price to go higher. Those are qualifiers. So this is the progression. It's pretty bearish. Then you get this fire out of the hole type of move, steep. The assumption is you got a lot of people who are short, a lot of people who are bearish that again get caught short on the way up, no chance to get out. A lot of stuck shorts mean a strong market. So you take all those things in, they become simple once you lay them out. They're not simple until you understand them and then are able to lay them out in a rational progression to understand, well, if I'm understanding that it's the other side I'm watching, it's where stuck traders are that are going to dictate the next move, that are going to dictate the higher probability of predicting the next move. It's always the case. It's like being in a subdivision and all of a sudden you see too many for sale signs that go up. Housing doesn't move that fast, but what if it did, right? Too many for sale signs that go up, sell pressure. Now all of a sudden, all those for sale signs maybe go down, and a lot of buyers you're hearing are coming in the neighborhood looking at homes that aren't even for sale. They're knocking on doors. You're going to sell your house. When you sell your house, give me out. All of a sudden, you're reading order flow the right way. You're reading what people are thinking and what they're doing.